John, very good to see you. Today, we're going to talk through 3 financial planning and investment opportunities in a down market, which we, of course, are living in right now. Markets are down. They're still very volatile. But before we talk through how to take advantage of a down market, I do want to talk through a little bit about what we're seeing. So this is a look at the S&P 500, the 1-month performance. Of course, we see a lot of big squares, though. Those are generally the Magnificent Seven. They've lost $2 trillion since the start of the year. So when we see this much red on the board, John, what do we need to keep in mind?
Well, you have to remember the S&P 500 doesn't understand your personal wealth. They don't understand your family, and they don't understand your risk tolerance. So where the S&P 500 can come into play is it gives a very nice broad index of a way to take advantage of the market and some of the highs and lows, but it doesn't know you. And so what we can do is use that S&P 500 to our advantage, but then also think about how can we adjust it to your risk tolerance.
Right, because despite the fact that it is 500 stocks, it is not a well-diversified portfolio.
Correct, and that's why it's so important to have somebody who understands your ability to handle risk. So that way you're not getting put into these high concentrations where some people love that, people want that. But there's others who just need to have it muted to some degree, and that's where we can come in and help with that.
Mm-hmm. So let's talk through how to take advantage of a down market. Number one, put your cash to work. It may feel more secure to hide all of your cash in the mattress, but if you do that, you are really compromising your ability to build wealth.
You are, the challenge here is everybody understanding their risk tolerance and how do they invest for them. But really in the big picture, if you can get your money into the market when you have these downturns, typically in the long run, you really can benefit in a substantial way. So the biggest thing is kind of going back to your buckets, and talking about where is the safety part of my portfolio and what money do I need right now? And let's say what money do I need over the next maybe 5 years in case this was a prolonged downturn? How do we shift some of the safe money that we don't need? And can we handle putting it over into that growth bucket a little bit more? And really, the people that do that usually find out over a 5-10 year span, they're much farther ahead than someone who maybe got really conservative, sat on their cash, and maybe wasn't making a whole lot in the bank, and all of a sudden maybe inflation left them behind.
Mm-hmm. Mm-hmm. All right, let's talk about the second strategy. It is called tax loss harvesting. This allows you to take advantage of your stock losses. Can you explain how this one works, please?
Yes, so this one's pretty important one to do, and this is something that we look at towards the end of the tax year. But really what you can do is take some of your losses or some of your gains and maybe offset some taxes in some of those gains that you have in your account. So maybe you were running that S&P that we were just looking at, and the S&P was up 10-15% when you sold it. And then you had some losses in your portfolio over the year. You might be able to use some of those losses to offset that gain in that S&P 500 that they're talking about.
Mm-hmm. And then the third strategy would be Roth conversions. Can you explain why a Roth conversion often makes more sense in a negative market?
Yes. And, obviously, if we go back maybe 6 months, the market was roaring. I mean, we
Yeah.
had some really good market gains, and people were seeing the S&P was at a 6,000 mark. People who went into that Roth conversion at that point may have paid taxes on a higher dollar amount than maybe they're looking in their portfolio right now.
Yeah.
For those who haven't converted to a Roth IRA, this could create an opportunity to convert some of your retirement savings into a tax-free vehicle by paying that tax on your asset. And with everybody's accounts being down a little bit, this may be a good opportunity to pay a little bit less in tax to convert those and look forward to moving forward. So maybe you do add some of that cash into that account. Not only do you see possibility of the market increasing with higher shares, but you might even have a more tax benefit with that as well.
Mm-hmm. Well, it's good to know there is a silver lining to our depreciated portfolio. So, John, if somebody wants to talk through any of these strategies with you, or just to develop a financial plan that isn't as exposed to the market risk that we're seeing right now, what's the best way to reach you?
Yeah, give us a call at 440-471-4300. Give us a call, and talk about your situation with us. We'll sit down. We'll go and see. Does a Roth conversion make sense for you in your situation? Do you have the cash to add to the market? And do you have the risk tolerance to wait through maybe some downturns here before we get some of that upward movement?
Great. John, thank you.
Thank you.